we'll be having a look at them in detail. Not these players, but market-wise players, again, which may or may not include these in the coming units. Okay, now we move to the crisis and some of the recent crises which are spoken about, which are discussed, and which are an important integral part of the financial system, or when we are studying about finance and global financial system and how integrated our Indian financial system is to global financial system, we always give a reference to the subprime crisis. So before I start telling about the subprime crisis, anyone wants to share their knowledge or what do they know about subprime crisis? Anyone? All of us have heard about subprime crisis. Yes. So yes, anyone wants to give an overview what the crisis is? Okay. Nipun, can we start with you?
Okay, so the prime crisis, according to me, was the number of people, just taking out a loan because it was that cheap back then, and the banks not paying enough attention to their capability of paying back the loans, hence called subprime lendings. And further, those were, just sold off to investment banks in form of what was the word?
Mortgage backed
Yeah,
securities.
mortgage-backed securities, and
Yeah.
which kept evolving. And then yes, CDOs were formed, and
Hmm.
so the chances were, even the more subpar and subprime mortgages were again remodeled by the investment banks and tagged as AAA, which was then again bought and everything. And then Michael Burry found this out, and then he like that was the other part of it, the other side of it, that a couple investors got this out and they profited off of it. But then most of the American economy and furthermore the world economy was, you know, taken apart from this
Badly hit.
the
Yeah.
housing bubble. Yeah.
Yeah. Okay. There were record levels of home owners or home ownership in the US. Now, what happened was all the banks, companies, mortgage companies, they were finding it difficult to find new buyers, home buyers. There was a lot of competition in the market to look for new customers in this segment. In this frenzy, a problem came when subprime borrowers were given loans. So now some lenders, in the rush to find new customers, they started extending mortgages or they started giving loans to people who would otherwise not qualify as prime borrowers. So now you are giving home loan or you're giving loan to someone you know is unable in the fair sense of paying back this loan, but there's so much eagerness or there's so much frenzy to capitalize on this wave of booming home ownership that you are ready to give out loans to people with weak credit histories. Now, these subprime loans itself started or triggered the problem because there was a term used, you are handing out ninja loans. So, no income, no job, no asset, no problem. This was the phrase used because at this time the lenders were very relaxed. They were giving ninja loans to the subprime borrowers, and this started the chain of events that ultimately led to this catastrophe. Uh, After the Great Depression, this is the next depression, next biggest depression that hit the global economy. Now, what happened is uh, lenders didn't stop here. There were investment firms who were ready to buy these loans, and then they were beautifully repacked into credit products which were known as mortgage backed securities. तो क्या हो रहा था, एक इन्वेस्टमेंट बैंक एक mortgage backed security कैसे बना रहा था, by approaching another bank to sell their loans to them. So what happened, जो इशूअर है, जो इन्वेस्टमेंट फर्म है, वो इन लोन्स को दोबारा से जेल अप करके रिस्ट्रक्चर करके इसके अगेंस्ट बॉन्ड्स इशू कर रही है मार्केट को टू द जनरल पब्लिक. ओके, सो नाउ देयर आर न्यू people in the market who are purchasing these bonds from the investment bankers. So now say they are here the bank is getting 12% rate of interest on the loan given to the subprime borrowers. Now these MBS have promised a return of 10% to the general public who has purchased these mortgage backed securities. तो क्या हो रहा था, सिंपल रीपैकेजिंग हो रही थी लोन्स की. वो लोन्स आगे they were used as collateral for these mortgage backed securities. People were investing in these securities, and they were expecting that they will get periodic interest rates जिसकी sourcing subprime borrowers से होनी थी. तो अब ये itself बहुत risky था, because you are putting up securities for sale that are again backed by something which is more risky. So you have MBS in between. They have taken the loan from a bank. Bank has given this loan to subprime borrowers, where the risk level is very, very high. Now, bank is expecting a 12% interest payment there. This MBS, when issued by the investment banker to the public, is offering a return of 10%. Okay. Now things were looking good at the outset, but the problem came when the interest rates started increasing in the US economy. Now, after a point of time, the Fed Bank started increasing the interest rates, and this affected. So, this was, you can see, from 2004 to 2006. Now, here the red flags were raised. There were problems which were coming to the forefront, but they were continuously being ignored by the lenders and these investment bankers. Between 2004 to 2006, the Fed Bank raised the interest rate over a dozen times. So from 1% in 2003, by mid 2006 it was 5.25%, and subsequently it increased to 6.25%. Now the bubble was bursting. Yes, someone has a question. Yes, anyone wants to ask something? So now with these subsequent increases in the interest rate, the borrowers who had taken loan from the bank, they started defaulting on the interest payments, especially the borrowers who had taken loan on ARM. ARM was adjustable rate mortgage, basically जो फ्लोटिंग रेट ऑफ इंटरेस्ट होता है. फ्लोटिंग रेट ऑफ इंटरेस्ट क्या होता है कि आपका लोन का जो रेट ऑफ इंटरेस्ट है या जो रीपेमेंट है किस इंटरेस्ट रेट पे होगी, जो मार्केट इंटरेस्ट रेट होगा. So that is a variable rate loan that was taken. So now when the interest rates were increasing, it meant that these borrowers, they started defaulting on the money borrowed from the banks. Also because of these subsequent defaults by the subprime borrowers, now banks, they started foreclosure. Foreclosure में क्या होता है, banks, they started seizing the houses which these people had bought using the loan. Now foreclosure हो रहा था, more and more houses, residential houses were being seized, and what this triggered was a fall in the housing or in the property prices. Now, also at the same time around, there was loss of jobs, and because investment banks, they were seeing growing number of defaults and loan payments, and they started kicking people out of jobs. So many of the borrowers were losing their job. They were not able to pay the interest on the loan, and they were not able to sell that property because the housing or the property prices had also dipped. Now, even if the bank took these homes from the borrowers or repossessed these homes from the borrowers, the economy was now in recession. So the banks were not able to resell the properties at the same price at which they had given loan to the borrowers. So this was a spiral, a never ending vicious cycle that was happening. Now banks, they started tightening their norms, less loans in the economy because they were hit hard by the subprime loans. So now they went for tighter lending. Now itself, the loan generation in the economy fell, the economic growth fell because now business and consumers were not having access to easy credit. So this spiral continued, and the trigger point for the stock market collapse was when Lehman Brothers failed in 2008. So it was around 15th September 2008 that, in spite of the bailout program from the federal government, which was known as the TARP program, CA, Troubled Asset Relief Program. Now, this was started by the US government, and they were trying to bail out banks, lenders, institutional investors at that time. One of the biggest beneficiary was AIG, but then it was saved. Beer Stearns had also filed for bankruptcy, but when it came to Lehman Brothers, it was a very big firm, Wall Street bond firm, 150 years in business, and they are collapsing amongst this already negative outlook in the economy. Now, this gave rise to a term which is known as systemic risk. So, systemic risk was the term used for collapse of Lehman Brothers. Lehman Brothers collapsed, a very big institution, which led to massive repercussions in the economy. So there were sell-offs. People started pulling out their money from banks. जो investment firms थे already red में थे, and they began to suffer more. People also started pulling out their money from the market. So this triggered massive sell-off in the market, which was not limited to the US markets alone. Then they spread massively to the world markets. So this was the great crash, stock market crash of 2008. So what you see is that the effect of the collapse or the uh, housing bubble burst at the backdrop was not limited to the US market, but world over the repercussions were felt. Obviously, if I talk about the Indian economy, it was severe to a large extent. There were losses with some banks. ICICI had suffered some losses because of their foreign exposure there, forex exposure in their portfolio. But overall, the Indian economy was protected well enough because of the strong regulatory norms in our financial system. But with the US financial system and the running of the financial system, now many critics over the years have pointed out of the reasons behind this whole collapse and depression that followed after this. Now, there are a number of reasons, but yes, the failure of government to or the Fed Bank to keep a check on these lendings, and then faulty credit ratings that were given to these mortgage backed securities again have been pointed out as one of the prominent reasons. And then there were mortgage lenders who were Fannie Mae and Freddie Mac. These were two biggest lenders at that time, mortgage giants. So they were giving loose loans, subprime loans, and they were actually buying and guaranteeing hundreds of risky loans, billions of risky loans at that time. So credit agencies, they were giving very high rating to the MBS, mortgage backed securities. Investment firms were giving out, banks were giving out easy loans, and then there were guarantors for this loan also in the picture. So the TARP program, it cost the US economy around 442 billion. So uh, the economy first it invested money, and then later it was able to sell 442 million worth of assets from the assets it had recovered or repurchased during the subprime whole this scenario, because Bear Stearns was bailed out, AIG was bailed out. The economy also bought a lot of subprime, these mortgage backed assets. So uh, around 1500 बिलियन का बेल आउट पैकेज था फेड बैंक का, और उसके बाद जब एसेट सेल करे तो सम ऑफ द एसेट्स, most of the assets actually, after reselling them, the US government made profit also of around 442 billion. But then again, this hit the economy to the lowest levels it had seen after the Great Depression. And it was showing how integration of the financial systems can sometimes backfire. So there were many lessons per se learned by this whole crisis. Through this whole crisis over the years, there have been a lot of analysis as to who was at fault, and they had there we have multiple players who together led circumstances, and the economy reached this subprime mortgage crisis.